Hello, happy Wednesday evening, everybody. Thanks for tuning in from all over the world. Some of you probably waking up in the middle of the night. Just kidding. Yeah,
You're
like
not.
Scott said. Well, unlike me, I need my sleep. Like Scott said, if this is recorded, I'll hit the recording. But for those of you who are here live, thanks a lot. Been keeping an eye on the attendance, and it's been rocking every week, and appreciate the support. So welcome to the Trade of the Week, August 31st, 2016, last of the month. We're coming up on a big 3-day holiday weekend. Don't be surprised to see the volume and the tape start to dry off Thursday and Friday as people start to head out of town. It's really one of the biggest trading lapses of volume that we usually see during the summer months. And then we get back as people get back to their desks and the professionals and the big money managers sit down and catch up on their RSS feeds and their blogs, and it takes a few days to kind of get back going again. So it's going to be a weird week between now and next week as holiday mode really does kick in. But before we get started, just a reminder of the disclaimer. What you're listening to here is Steve and Andy banter on about some trading and some ideas and some cool technical products that we have here to show you. So with that said, we're content providers, software service providers. We are not registered investment advisors nor series holding brokers. So if you need investment advice tailored to your own finances, talk to somebody there. But we got to just remind you that we are here to just give some content and try and be entertaining and educational in the meantime. Never really want to spend a short amount of time on this slide. I'd like to stick on it for a couple minutes every week just to remind the people who are new that you are not alone with trade ideas. You know, we just got some great feedback again today, which will probably wind up on the website. But the hand-holding, the customer service, the concierge, the way in which we onboard you guys is second to none out there. We have the ability to do so, and not with, trained monkeys that have never traded before. Myself, Dan, Brad, Jamie, Andy, we're all seasoned traders, probably with almost 100 years of experience combined with us. So we're all here and we understand and we have the empathy of what it's like to try and get through the learning curve of trading. So that said, we have the daily trading room with Barry Einerson, who does a great job as a moderator and trading his own account. There's over 500 people every day in that room, and especially in the first half an hour, there's a lot of really interesting stuff going through as they're catching some of the low float momentum stocks in the early going. Alpha Predator is a strong strategy that you guys have probably heard a lot about. But there's no place else that has this many people with this much quality content and showcasing this awesome of a product for free. We're slowly cannibalizing some of the other rooms out there is what I'm hearing, but that's okay. Every day, trading room, 4 webinars a week, 2 of them today. Dan and Brad did one earlier today, which is more geared towards question and answer about the product, how do I type stuff. And then in the evening now is more focused on some trading stuff. We talk about the trade of the week and maybe try and pick some new happy topics each week, something of use. And then Mondays and Thursdays are also aftermarket trading webinars for 1 hour. All of them are always recorded. You should be, you should have our YouTube channel up. If you don't, you can access all of these. And lastly, and most importantly, this is the big one, the one-on-one sessions you get. Once you sign up for a 1-month Trade Ideas subscription, you're getting pretty much the value of that 1 month in 1 hour's time with us as we sit down with you and share desktops and find out what your objectives are and get you pointed in the right direction, share some of our alerts, maybe even create an alert if you've got something in mind that you wanted to start with. But that in itself is also invaluable. There's a lot of other software companies that just kind of turn you loose, give you some documentation, and send you to the help forum. So with that said, if there's anybody out there sitting on the fence that's thinking about subscribing, we do not have a free trial. We will have an open house coming up in October where you can try all of the tools for free. Not for free, for a modest fee, usually under $10. But what I meant to say was all the tools will be available to you to try for 1 week. But that only comes 4 times a year. In between those times, if somebody's eager to make a trial on this, you really just got to consider 1 month with the promo code that Scott's going to give you here at the end, and then you get set up with a 1-hour session with us. That really pays for itself as far as I'm concerned. So there's your value added, trial, for lack of a better word. So again, never want to spend too little time on this slide. We really pride ourselves on the way in which we're trying to onboard, and I think the growth in subscribership is certainly reflected of that agenda. What are we going to do tonight? Well, kind of more the same as what we do for the most part. We'll take a look at the market recap again. SPYers. Holly had a very quiet day. We'll take a look at Holly and talk about a few things, a few concepts. Trade of the week this week was Restoration Hardware. It's doing okay. We'll break that down and maybe even check in on the last few trades of the week. And then something new. We're going to build an alert. It's called a pro gap. If you haven't heard about that, we'll define that a little bit more as we get towards that portion of the program. And then we'll pull up my price alerts. We set a few last week. We'll take a look and use the price alerts to find out what's working. Like Scott said, a lot of you, the majority of you in there have the premium subscription. So you're going to have the price alert feature. I'm going to try and show you a few ways in which you can make that work better to your advantage. And then kind of slim pickings again, but we do have a few price alerts that we can set again this week and talk about as well. So that's what we got on tap, Andy. What do you think about that?
I think it's a great lineup, man. Yeah.
All right. Well, before we do so, just a quick, this is still our proprietary performance. As we get more data and down the road in the future, there will be an interactive web page that will allow people to get more familiar with the performance of Holly. But the green line is our AI from the beginning of the year, a very flat-lined S&P here in blue. A little bit of a Brexit hiccup here, which is notable because Holly said, I want none of that. That's not statistically probable. I'm going to stay away from volatility like that. And then a really nice upturn lately as we've had some new additions to newer strategies and also better risk management. Holly's doing a much better job of risk management, which we will talk about. So let's just get right into it. We'll start with market recap. All right, spiders. If I could play the song again from Aerosmith, Same Old Song and Dance, I would do so because, again, that's what we've got, the same old song and dance. For those of you who have been tuning in over and over, I've been really highlighting the way in which the markets close every single day. We just are not closing weak. It's just every day there seems to be a bottom wick tail pushing this market back up, 3 o'clock, 3:30 buy or what have you. Big head fake here, back to the upside, and then propelled us into our new trading range, which is what we've been in here for about 3 weeks now. And we had another volatile spike here, which tried to drive the sellers out, but we could not close below this range. Once again today, I looked at it, and Andy wrote me. I said, we both know what's going to happen here. We just laughed, and sure enough, buyers popped back in. It's like this is just a constant reminder of the bias that this market has, holding a balloon underwater and letting it go. It just wants to keep popping up. So until we have a big red candle that closes back down in these areas, it's the same old song and dance. The path of least resistance is up. This market is still innocent until proven guilty, but the first red flag will be a close below this orange support line. We've tried 1, 2, 3, 4 times, 3 of them very diligently, but certainly just can't do it. You got any thoughts, Andy, on our markets?
No, I totally agree. I do think at this point, though, if you do get, a break and a close, I think there could be some damage done because you're getting the same pattern, like Steve said, every day. You get a sell-off a lot of times not every day, but a good portion of them. You're getting a sell-off in the morning, and then you hear about the 3:30 ramp up, and there's some psychological reasons for that. I mean, a lot of people, you see the same pattern over and over. You get traders that, okay, here we go, it's going to do it again. They load up on the long side. You got the short squeezes being put on, and those work, and just like everything else, until they don't. And the next thing you know, one of these times it might not work, and because just like you could be knocking on the ice to the upside, and we're definitely knocking on it on the downside here. So we'll see if one of these days, if we don't get some continuation, it could get kind of nasty.
Like that old game, that game, Don't Break the Ice, where you tap the plastic white cubes and try and break the ice. Yeah. Well, you said something a minute ago that was rang in my ears. Short squeezes. Certainly going to be a theme for the rest of the webinar here. The last few trades of the weeks were kind of also based around the possibilities of short squeezes, so we'll get to that. But that's the bigger picture. We're still here in these trading bands. We'll continue to use these trading bands until they fail. One more thing of note, again, Andy and I are only focused on the footprint in the sand, price pays, everything else is somebody's opinion, and we all know people have opinions. But there is a little sidebar out there. Seasonally, September is seasonally the worst performing month of the year. Most people think it's October, but it's not true. It's actually September. So that's in the back of my mind. If we come into September and we have a couple of really nasty bad closes, well, then everything we've been talking about here for the possibility of the path of least resistance moving higher might change. And if you're going to be a good trader and be a long trader, a long-lasting trader, you have to have an open mind. You can't have a closed mind. Andy and I recall this poor trader. We learned how to trade with Joe. Joe was an attorney, and poor Joe just could not get him to switch his brain around mid-sentence during the day if things changed. And he was an attorney, and that was what he was trained to do. He was trained to take a side and argue it to the death. And that kind of thinking doesn't work well in trading. You've got to have an open mind. You've got to know where the exits are. You've got to know what the next possibility could be. So that is that.
Yeah, one other thing, Steve. I mean, don't we have jobs numbers this Friday?
I think that when you get them when you get the first on the actual day, they won't do it. The government, they just can't work that fast, Andy. They'll get their numbers together tonight. You can't ask them to have them together tomorrow. So when the first falls on a Friday, it usually delays to the next week. Not to mention half these people are probably going to be on vacation with one foot out the door.
No, the first is falling.
The first is tomorrow.
The first is tomorrow.
Right.
Yeah.
I don't know. Somebody might want to look that up.
I think we do, because I think we had ADP numbers this morning. But
okay, I was confused. If the first was on a Friday, that would not be the case. But the first being tomorrow, we may be getting numbers. So
I think we do. Yeah.
So somebody knows that.
If somebody can verify that, I'm pretty sure. Yeah.
That could be a catalyst.
That's what I'm saying. Here we are again. We talk about waiting on big numbers. Last week it was Janet Yellen and Jackson Hole. Now you got jobs.
Market's always waiting on
unless
something.
I'm wrong, but yeah.
Market's always waiting on something, it seems like. There's never a moment where it's not.
Yep.
All right, so Holly the AI, interestingly enough, we had another risk-off day today, and here's why I would call it a risk-off. Not only because it was factually a risk-off day, that's where the money was made. Exiting with Holly, that's a risk-off trade. Getting out, why won't that stay with me? A risk-on day is saying I'm not going to exit with Holly, I'm going to go for bigger moves. The problem is everything you see here today we had going to the long side except for one short sell. And when you've got a market that gapped down and trended down for most of the day, then the magical 3 o'clock, 2:30 buyer came in. This is a typical risk-off type of day. It's noisy. It's going against the direction. If this had been a nice, broad-based rally type day and these longs were the same longs that triggered, I pretty much guarantee you risk-on probably would have really kicked butt today. But it didn't. And so throughout the day, we have this little indicator here to just kind of remind you which horse is winning the race. Is exiting early and scalping and taking profits with Holly, is that becoming more profitable and more better working, or is hanging out for risk on and seeing if the market can continue to move higher? Well, if we look at the actual trades today here in our closed trades, we can kind of see here's the risk off column, and starting at the top at the winners on the risk on, pretty much all of these are below the values of the first risk. So a very quiet day, not a lot going on in terms of big movers, nothing really more than a 2% mover. But hey, I showed you that graph earlier. Holly's been kicking butt. She's entitled to a little rest, a 0.00 type day once in a while. But there's one more takeaway from this, and people always say, well, this is just day trading, right? And we've got to remind you, no, anything that comes up in these alerts, any of these windows I'm clicking on here, including this, Holly is just another alert window with a lot more statistical pizzazz behind it, with the back testing and the statistical probabilities, with the win percentage score and things like that. So there's no reason why throughout the day, you shouldn't be taking a look at these things. For instance, this KPTI, if I pull out and zoom out, this is starting to look kind of like a trend change lubricant stock to me. Short float right here in my single stock window is 14. I like to see at least 15, but nonetheless, here's a trade that Holly spit out that I might as well not have known about. So I can just quickly go in here and just say, well, this might be interesting. There's a pivot point back here and these highs up here. I'm just going to go ahead and grab a new price alert, roughly eyeball it, and say I got this one from Holly. And keep an eye on it if it triggers. Now, if it triggers, I'd like to see it maybe trigger in a few days after butting up against these levels from today and moving sideways. It expended a lot of energy today on this gap up. But that's one possible example of people saying, well, can we use Holly for swing trading? Well, we certainly can. We just got to use our price alerts to make sure we don't miss the proper move. There was another one that I found interesting.
Before you move on, too, I mean, the volume, the volume in that cannot be.
Oh, yeah.
I mean, look at that relative volume on the daily chart compared to what you've seen over the last 4 or 5 months. That's some serious volume. So that's one to keep on the radar. Maybe even a pullback alert if it wants to come down and wick again around the 9 level. Yeah, I mean it's just that's something I would probably bracket. Yeah,
pullback.
Exactly.
Holly pullback. So we can kind of bracket that one, and we'll make that go long if we want it. So we got kind of a bracket there.
I don't think. Yeah, when you see volume like that, you want to keep it on the radar for future, price movement and capitalize on it. So you want to put the price alerts in there, so you'll be focused in just have it on the radar because something's going on there, and when you see huge volume like that, so
yeah, it might go to sleep for a week and consolidate sideways, but then you'll forget about it. So we're using the simplicity of our tools to identify, observe the footprints in the sand, and then mark down and make sure we don't miss it. There was one more today that I thought was of interest. I'm looking through. If we zoom out here on this daily chart, again, it's kind of very trend change lubricant looking, very head and shoulders type bottom. So here's what I'm going to do on this. I'm going to take that orange line off. I just wanted to use that as a reference. And for those of you who are wondering, there's a little trick. You've got to turn the show crosshairs off. Now we can grab these things and move them around and do what we want. But in this case, I'm just going to highlight and click delete, highlight and click delete, put my crosshairs back on. And now I'm going to go in and set an alert. Now this was an alert from Holly. It looks like a very interesting long that I would not have known about. 1467 is the high there, 1465. So we're going to go 1468 and create that price alert. And we're going to call this Holly. Simple as that. All right. Didn't see much else, but again, the idea is go through, look at these trades, and see if there's something that you may have missed today on the bigger picture. Again, this might be one I could come back to. It kind of triggered today. I'll keep an eye on that one. I'm not going to mark it up, but you can see it's just yet another active window to keep an eye on what's out there and what the possibilities could be. All right. Anything else you want to add on the AI today? It was a quiet, kind of a quiet day.
It was very quiet, and the market has been in like this range, and it doesn't surprise me at all because Holly is paying attention to price action, and yeah, there's just not a lot of opportunity out there, and Holly's not seeing it either. I mean, it's not a lot of trades. I mean, she put on today probably eight, 9, something like that. But anyway.
I'll tell you, there's going to come a day when Holly all of a sudden maybe has some longs and some shorts, and the market opens up, and something happens under the scene that we don't quite see with our eyes. But what I'm saying is, if you see this, pay attention. If you happen to see Holly go short and take a bunch of shorts, short, maybe throw about 4 or 5 shorts up real quick as the first trade of the day, usually when I see that, the market starts to roll over. I haven't seen that in a long time, so I'm just kind of bringing that up as an observation. If you guys do see that, pay attention to market direction, because a lot of times the first trades out of the gate for Holly kind of have a nice directional bias to them as to the way the market wants to go in the next 30 minutes or so. All right. Let's put that back to open trades, and we'll see as we speak right now. Ms. Holly is rejiggering all of these strategies and back testing and seeing what she can come up with. All right, trade of the week. If you're not on the trade of the week, I don't know how you got to this webinar, but if you are, you're getting an email on Monday mornings, and what we're usually looking for, and it's discussed throughout the weekend between myself and Jamie and Dan and Brad and whoever else wants to chime in, even Barry. But we're looking for, once again, here's that trend change lubricant type of look. Now, let's take a quick look at RH on my quick single stock. Short float down to 35%. It was higher, so it's starting to come down a little bit, but still a relatively great, manageable short float for a possible squeeze. Love the fact that it kind of filled this gap. If you look at the gap as the top of this level here, look, it corresponds to here and over to here. So it kind of completed a pivot level on that big breach down, which was Friday. So going into the weekend, rather than trying to pick another breakout, which I'll highlight in a moment, XLF and Intel, those were kind of breakout type stocks, was looking for something a little different. And you guys have heard me talk a lot about trying to identify areas where somebody else got stopped out and then turn that into a positive situation for yourself as an entry. So this is the way the candle looked on Friday going into the weekend. It touched just that pivot level perfectly, and it felt like the coast was clear that we were going to have a continuation move, and so far so good. It's still in the green. Obviously would love to see it get back above this 36.58 level from back here, but time will tell. It's hanging on. Speaking of a similar type of trade of the week is SQ. SQ was called, I think, right back here. This was the beginning of the horseshoe pattern that we all, maybe not all, but I love to talk about, and Andy's heard about ad nauseum since 2002. I've been trying to identify these patterns. They work on intraday, obviously because we have a horseshoe pattern alert, but they also work on the daily chart, and such was the case with Pandora back here. This was considered a horseshoe, and it's just continued to move higher. So SQ actually has a really nice short float. Look at this, 60%. This is huge. Square, if you don't know, Square is that little device that if you're buying food from a guy at the swap meet or a food truck, and they've got that white square stuck in the top of their iPhone, they swipe your card through it. That's what we're talking about here. And it's a rather new issue. If we pull out, it's not that old. This was the first day of trading right here. It looks like it opened at this level. Significant level of opening right there in that first candle. So we're now back to where it opened up on its first trading day. But with 60% short, I wouldn't be feeling too comfortable if I was a short here. This thing could continue to move, and we sure hope it does because it's one of the active trades of the weeks.
Has it gotten the gap fill? It really hasn't gotten that gap fill yet. It feels like it wants that. Going back to the first.
This one here? This one here?
Oh, no. Going back to 5-2.
I'm sorry. Right here.
There you go. No. Yeah. It probably wants it. Yeah.
Sure. Go get it.
Yep. Yeah.
Okay, so as I mentioned, XLF, no, that was 2 weeks ago. The closest was Intel a week and a half ago. Nothing wrong with Intel. This is a decent-looking chart. Nice move off the bottom, gap down, probably earnings, recovery sideways, making higher lows and higher lows. And a lot of the semis have been moving nicely as well, so this represents one of the breakout type moves. I'm trying to recall where it was called exactly. It was back in this level somehow for the most part, but we're moving higher and it's in the money.
Right there, the red spinning top.
The red spinning top. This one?
There. Yep. That day.
Oh, that day. Okay, because we were breaking out. So here's the candles we had to work with, green, and then it opened up a little bit, gave a little bit back, but not much, built a higher low, which of course we love to see in 5 nice days of push. XLF, in my opinion, guys, is leading this market higher. S&Ps did not look like this yesterday. Okay, S&Ps look like this. But there's an old axiom, the old Trader's Almanac, the old Trader's Handbook. Good rallies can be led by the financials. And right now the financials are trying to show us they want to lead. Not only that, look at this candle here today. They tried to sell it off. We can look at it intraday. Tried to sell it off. Boom, right back up. Typical of what we've been seeing in the S&P. Yeah. Really nice looking candle coming off that. I would hope to see some follow through tomorrow from XLF. So just a quick.
Can I add something to that too, Steve? Yeah, I remember if you go back to that little tight spinning top right there, 2 more back. No, I'm sorry. Go back the other way. Right there. That was the day of our last webinar, and that you did, and I mentioned, I said, you know what? I love that because it's showing relative strength. If you look at that date on 8/24, and then go back and look at the spiders on that date, I like the
spiders were falling back down here.
That's what I'm saying. That's what I'm saying. I love the relative strength there in the XLF on that day. As the spiders moved lower in there to the bottom part of that range, I thought they were holding up. And I made a comment in our webinar, about that. I said, yeah, that's to me, that's some really good relative strength right there. And I think you got a good one there.
And again, it's very important to see the financials trying to lead a big move. That's always been the trader's almanac. So there's a few 4 or so of the trades of the week that are all intact, hopefully continuing to move. But the theme, again, is looking for stuff that's trying to make it a trend change and move higher. Yelp's was a great one many months ago. We found Yelp, way down here. And if we look at it even more, there you go. There's the trend change. So we're trying to find stuff that can break these trends, ideally with a nice base and a nice full gas tank full of shorts. That have to unwind as well. So that's just kind of the theme for those of you that are curious. That's what we're looking for. We're not looking to find a day trade scalp. We're looking to find something that can sit in and actually perform over the course of weeks and months. All right, so trade of the week out of the way. Something new today is called the Pro Gap. Pro Gap is something that people have been talking about as a good trader in the live trading room. He talks a lot about the Pro Gap, and he loves it when Pro Gaps actually gap above moving averages and whatnot. So I thought it'd be a great example to just kind of give everybody another quiver in their arsenal and build a quick alert, from scratch, just knowing what it is we're looking for and moving forward with, yet another strategy to keep an eye on. So what is a Pro Gap? I don't necessarily have an example of a Pro Gap. But I do, because it's right here on this particular alert. It's the only one that came out today. But a Pro Gap is something that kind of surprises the direction. It's a large gap going the opposite direction. Here's the direction going down, 3 or 4 days going down, when the momentum's down here, but all of a sudden we have, yes, I am talking about real, thank you, Essex, we have a nice reversal gap up. And the reason it's called a Pro Gap is because the institutions are probably behind this. It's a significant change in something, and there is a lot of shares chasing it. The amateur gap would be a continuation gap to bleed down here like this. So these can be interesting plays, and in my opinion, they are the most interesting in the first 15 minutes of the day. As you see, if we zoom in here, this first 15-minute candle gives a little bit of opportunity to kind of wash through some of the unexpected momentum that came through from the overnight gap. There's another example. If I go to history, we only had one today. If we go yesterday, we've got this Tech D. Again, here's Tech D, was looking real weak, down, 3, 4 days down, and then boom, a reversal gap in the opposite direction. And if we look at the intraday on that reversal gap, we can see once again, in my opinion, the real meat of the move to play is in the first 15, 30 minutes on these things. Then they can start to go, wacky. And yes, I will share this, because here's what we're going to do, Nick. I just explained kind of what a Pro Gap is. A gap in the opposite direction, kind of neck snapping everybody that wasn't expecting that. And they can be interesting moves. They can be interesting moves throughout the day, or in my observation so far, more so in the first half hour of the day. But the exercise here is, how do we translate what we want into trade ideas? So the first thing we know we want is we want a few down days. So we have a filter for that, and that's called consecutive candles. And the way in which we describe consecutive candles on the maximum side here is the use of -3. If we wanted 3 up days, we'd put a +3 in the minimum side. But get in the habit of checking this button here, clicking this button, because it reads it all right here. The stock was down at least 3 days in a row. So in context, that's exactly what we want to know. So -3 is going to guarantee we had at least -3 days coming into the day that we're going to be sampling. The gap, I've got filtered. I want to see a gap. So now that we have a value in here, all of these stocks have to have a gap. And the minimum in this case is 1.5, and I might experiment with that. I might use 2.0 or 2.5, or maybe 1. But for now, it's 1.5. That's what I'm using. Price, minimum 5, maximum 200. Not a big deal. Daily average volume, 250,000. And I'd like it to be at least above the 200-day moving average. just to make sure that things are not going into a death spiral and it's just kind of a fake out gap that's going to be faded. So, I could also try and put that above the 50, but I'm going to experiment with this. But this is my starting point. And the takeaway is, how do we try and translate what we're looking for into trade ideas? So real quickly, once again, we need to be coming off of some down moves. And what I could also do on this is I could say, well, position in 10-day range. I could take position in 10-day range and maybe make a really low value to make it say the stock's been beaten up pretty good in the last 10 days. I haven't tried that yet. This is still kind of new. That's something that maybe you guys can try yourself. But the point is, we're trying to identify something that's down coming into the day that's going to gap up. And then we define our gap as a minimum of 1.5%. And it really is as simple as that. And then using the 200-day as kind of a barometer for where I want it to be on the daily chart. So yesterday it came out with Tech D, which had some nice movement in the morning. Again, really a neck snapping move on the daily chart. It's called a pro gap. I will share this with you. And actually, let me turn off history, because that gets turned on. If we don't do that, we're going to go back to real time. So here's how we share things: save to the cloud, share. And then I'm going to drop this into the chat window. On your GoToMeeting toolbar, you have a little chat with a plus next to it. Just open the window by clicking on the plus to expand it. Type in Pro Gap and paste, and there you've got that. So that's kind of the way in which things just kind of start in Genesis and work from there. And maybe next week I'll have a few more filters. But as you'll notice, there's Pro Gap up. We can also have Pro Gap downs. So here's a great exercise into just showing you how simple the flip command is. We just duplicate our working copy here of our Pro Gap up. We go to Configure, and we hit the flip button, and we basically are now inverting everything that needs an inverted value, like consecutive days down, consecutive days up. So now we've got an inverted flipped Pro Gap. So I'm going to close that, because I'm going to make that your homework assignment. So for those of you who did just receive and take this as a cloud link, do what I did: duplicate it, configure it, flip it, and then rename it Pro Gap Down, and you'll have yourself your own copy of Pro Gap Down. So that's a new one that I'm working on. Maybe it'll turn out decent. It's only had one trade today and one trade yesterday. I'm going to keep an eye on it, though, going forward, and see what we can get. So now I want to move over to the price alerts. And
Steve, can I add something to that there?
Of course.
Philip makes a great point. He said it trapped a lot of traders in the wrong direction, and that's a very good point, because the reason you get that a lot of times, that sudden move, and why you have to be quick, is you get a lot of shorts that are caught the wrong way, and they're rushing to cover in the early minutes, and that's why your moves a lot of times in the first 10 or 15 minutes, they happen early. So yeah, a lot of good traders, somebody mentioned Real, they won't hesitate, in buying something like that early, because the shorts are rushing to cover.
Yep. Real has a similar type of scan. I think it's very, very close. We just might be using a different filter is all.
Sure.
But the Pro Gap, you're right, Andy, I think is the most value in the first 20 to 30 minutes, as the surprise is being leaked out, and then the rest of the day just becomes kind of washy. But we'll see. I'm going to keep an eye on this one moving forward. It's kind of a new strategy. Okay, so price alerts. I got a little bit of a demonstration for price alerts, because I wanted to say again, what's working, what's not working. If you have price alerts, you have to be using this as one of your best teachers and feedback mechanisms. What is working? All right, so let's double click the P&L, which is positive, and let's just see here, of all this green, what's working. Let's take a look. Trend change lubricant, short squeeze. Trend change lubricant, short squeeze. The squeeze me, which is a different one, short squeeze. Trend change lubricant, short squeeze. Washout bounce, that was a good one. And I'm going to show you this one in a second. It's a pullback. I think we actually set this one. Now, when did I set that one? I set it on the 29th. Yeah, that was on the 29th.
You're on the wrong day, Steve. You got to sort my created.
I know, but I'm sorting for now. I will, but I'm sorting for now to show what's working. The green, the P&L, the P&L, what's working? Right. Going long, trying to find short squeezes. That's what's working.
Yes.
What is not working? Let's go over here to the negative P&L. Short, breakouts, shorts, not working. Now here's a trend change, it's kind of flat, but for the most part, this is what's telling me shorts are not really working. That's okay, we'll still try and pop a few in there to keep an eye on them, but this is what's working, so it's what we want to continue to try and focus on. So now what I'm going to do is another little quick demonstration. I'm going to double click created and sort by. And what I want to do is grab everything down to the 24th because the 24th is when we last met. I'm going to delete these 14 selected. All right, and then under the 24th, here's the 17th. This is the 17th. Going to delete those 6. And this is what was left with you guys last week. Looks like these all triggered. 2 of them have not triggered. So for those of you that took these alerts from last week, this is kind of how they worked out. So again, the squeeze me's, the trend change lubricants, those are the ones that seem to be working. And we're going to go ahead and mark up some more stuff and see if we can continue to try and create some alpha there. So I'm going to delete these, which is the perfect time to do it. September. What?
Oh, I just wanted to show them that LE.
LE.
I thought you were going to go over a couple of those. Yeah, that was a good one we talked about last week. No problem.
Yeah, LE had a pullback. Where was that pullback? Oh, it's been deleted now. I had a price that was deleted.
1750.
Yeah, it was 1750. So here's what it looked like. We talk a lot about not chasing, not being this guy here to buy and feel like you're being left out because at some point there's going to be a pullback level and there's going to be a breath that's going to be taken. And sorry I deleted that so quick, Annie, you're right. But this is kind of what it looked like, and that was on there as well for you guys. So that's what a pullback bounce would look like. Hopefully that would establish and rebuild a new higher low going forward. All right, so I was so eager to get to some of the new stuff.
I'm sorry to interrupt you. I just knew that was I thought that was a great little
no, it was
right there.
Yeah, my bad. Yeah, that was my bad. Okay, price alerts going forward. Let's just go to the trend change lubricant because that's what's been working. But I don't have a whole lot today to choose from in there. I actually, throughout the day, I keep an eye on this, and I found a couple that I thought were interesting, but they're not. Not writing home about them, not doing backflips. First one was SALT. SALT looks to have a short float of 26%, and this seems to be the obvious level right here. I'm going to go ahead and use this wick and get kind of a head start just below that orange line to see if something can happen there. Ideally, I'd like to see it go sideways for a little bit. But slim pickings again, trend change lubricant, but I got to mark it up so I know going forward, if it's not working as a group or if it is working. We had that. We had PMTS that showed up at some point during the day. Now, this is a great example of what I was just talking about. We don't want to be the one that buys after 2 large green days in a doji. Certainly, that doji could be a pause and it could move higher, but more than likely the odds are if you chase that, it's probably going to breathe and pull back on you. So why not use this level where it kind of broke out of earlier? Right there, 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 and there. We got basically 4 little levels. I'm going to use the high of that wick, which is 525, so we're going to set a pullback alert at 525. We're going to remind ourselves that this is going long, not short. This is a trend change lubricant pullback alert. And I forgot what the short was, 21% short, the float. And I want to make sure I get 525 because that's where I wanted it. All right, so there is a pullback alert. Not chasing, but maybe looking for a safe entry. That's all I have basically for the trend change lubricant. Now, I know the shorts have not been working well in the past, but I don't want to leave this one untouched because this thing's really starting to fill up. Even though the market's been going higher, the flipped trend change lubricant is really filling up. And I'll point out something here. Normally, sorting by relative volume can be a good thing. But in my case, I'm going to sort by something different on this one. I'm going to sort by percent change. I want to focus on these ones that have had very, very small changes. These ones down here have had big red candles, big red runs. I don't want to chase those as much. So I've identified a couple that I'm going to set up for a short, and they're up here in the lighter colored area because they didn't have a real wide candle today. And as we look at each one of them individually, I'll show you why I like them. The first one is KODK. Looking at the daily chart, it's kind of like we do on the trend change lubricant. Loving when stuff goes sideways before it breaks out. Well, in this case, it's knocking on that ice again, trying to find the break in the ice. I'm not going to chase candles that already broke down through here, but when I see a definitive line like this right here, I'm going to use the low of this green candle, 1545, and we're just going to pop in, create a short alert at 1544. And oops, we got to remind ourselves, TCL short. And there's the first of 3 shorts I'm going to have. The second one is PAAS, P-A-A-S, which I believe is a silver stock, isn't it, Andy?
Yes, it is.
This one got a little bit of a head start, but I want to know if it's going to break this level right here. If it does, it could have some follow through. So I'm going to look at the low there, 1701. We'll just go 17 on the knot on the right on the screws. Got to type it all together. That's 71. Okay, 17 is going to be our trigger. TCL short. And the next one was FPL right here. Once again, you can kind of see it's been knocking on the levels, looking for something. It actually got a little bit of a head start today. So with that head start that I see on my crosshairs, we're just going to use the follow through for today's lows. 1305, so we got to go 1304. Right click, 1304 short, TCL short. And that's it for the shorts. We got to at least have a couple, because if things do start to work, we want to know about it. Lastly, I'm going to go back to the one that I've been using on the last few weeks, which is the washout bounce. Where is my washout bounce? Here we go. Let's take a look at a few of these, and there's actually something kind of funny on here, but I'll get to that last. The washout bounces that I like, ENB was the first one, and let's see why I liked it. Okay, really nice low-end hammer down here at support levels after many days of falling. Hammer's closing near highs today. I'm just going to put a alert right above today's high, which is 39.55, and if that trades above that tomorrow, that will trigger all this the washout bounce. I'll go through a couple more because I don't like some of them. This one's just too tight. Look at where it's come. It's just right in the middle of its range. Nothing really going on there. This one you could make a case for it, but I don't think I'm going to use it. That's not the one I had. It has had some nice movement down. That very well could be a head fake, but nothing really jumping out. This one I kind of like a little bit more. I like the long tail, taking out this tail right here, trying to run those stops in a very definitive tabletop right here. So rather than do the high of today's candle, I'm just going to look at today's washout and say this might be the precursor to a nice move above these levels here. So I'm going to go to that red candle, 57.19. We'll go 57.18, and we're going to call this washout bounce. If I could spell, there's no P in there. Let's take a look at a couple more, even though I'm not going to use them, but why I don't like them. This one gapped down too much, didn't really close near the highs like I'd like to see it. It's kind of in the mid-range there. Nothing going on there. Nothing really too bad about a really big giant gap down. I would have rather seen it, maybe close to these candles over here, but I can't really explain why. Nothing's really jumping out at me. Here's the funny one. Anybody recognize this one? Look what showed up on the washout bounce. Yes. Good old SPY. How about that?
I didn't know that.
Yeah, I figured you'd get a kick out of that. This one I hate because it gapped down. Big long green bars I'm not interested in. I want to see something that started up high and washed out and then returned back high, and tells me the coast should be clear on that. So those are the 7 that I got for you. I'll go ahead and share those now. If is anybody asking for, for the washout bounce, we'll go ahead and throw that in there, save and share. I'll put that in the chat window as I go back now and configure the price alerts for those that want to have a copy of our price alerts that we just set. All right, here's our brand new list for September. A couple shorts, a couple longs. Let's just see how they work out. right-click, share 7 selected alerts, copy and paste. I'll drop the price alerts in here. Anything else you want to add before we conclude this week, Andy?
No, not a whole lot to add. Just know we have a lot of new visitors in here today. There's a lot of great stuff happening, guys. These alerts, they're if you haven't been in the chat room, you definitely need to make a trip in there. And yeah, as far as trading goes, it's like Steve said, it's really. I've been trading for 18 years, and this period, the last week of August and through really about a week after Labor Day, it can really be kind of slow. A lot of people think it's immediately after Labor Day people come back and start firing off. Doesn't seem to be the case. I've noticed that Wall Street will come back from the Hamptons or wherever, and they will maybe do their whatever they do, studying and getting their bearings, getting ready for the fall ahead, and they will wait. It seems like about a week after Labor Day, it'll start picking up some.
Yes. Somebody's asking me about sharing the price alerts. You can email me, steve@trade-ideas.com. I'll be happy to share those alerts with you at that time. Somebody also asked about the Squeeze Me alert, which is interesting to notice that SQ is on there. And also, I believe RH might still be on there. At least it was at one time. There it is, RH. So just so you know, 2 of the active trade of the weeks are currently also on the high end of the Squeeze Me here. Somebody was asking for that, but the request has been approved. Right-clicked, dropped it into the chat window. And again, if anybody's not getting what they were hoping for in terms of a link or a cloud link or a setting, you can email me, steve@trade-ideas.com, and I'll be responding to you pretty quickly. So that's what we got tonight. Once Scott come on in and let people know how to save on a promo code to try out for 1 month and then get a one-on-one session, and that's worth its weight in gold, I'll tell you that. Hello, Scott.
Hey, I was on mute. How are you?
How about that?
Great. Yeah, you can pull that slide up that has the sale information on it. And also, if I could direct everyone's attention to their handouts panel on the GoToMeeting interface, GoToWebinar interface, go ahead and expand that. Click on the link, and you can download this also to remind you. Also, that download has our contact information slide as well. So you get a preview of our Labor Day sale, which goes on through the end of Labor Day weekend. That's a holiday here in the U.S. that's coming up next Monday. So for the next several days, everyone can get in on this using that code, LABOR2016. And the letters are all caps. It's case sensitive. Just use that when you go to trade-ideas.com/price when you check out. That saves you huge on the premium and saves you really well on the standard. This is more than we usually discount these on our sales. So you can take a full quarter, 25% off your first month or year of premium. So you save a lot off of premium, down from $18.88 down to $14.16, or from for the monthly for premium, your first month only $141 down from $188. Great value, and you get access to Holly, price limit alerts, all that good stuff. Also, our odds maker back testing tool. So for the standard, you get to save too. Also 20% off the standard, $710 for your first year, $79 that first month. And the standard also includes a full hour of training with Steve, Andy, or Jamie. As soon as you purchase either the premium or standard, just go directly to the support section, click on training, and pick your best time and date. Again, you can download this. There'll also be a replay of this webinar tonight or tomorrow morning, depending on when the upload happens. You get an email notification of that, along with a reminder about the sale that's going on through the weekend. Thanks, everyone, for attending. If you have any questions, you missed something, you want to request something, contact info@trade-ideas.com. Andy is Andy@trade-ideas.com. Steve is Steve@trade-ideas.com. You can follow Steve on Twitter. He's Today Trader. You can follow Dan Merkin at Trade Ideas 1, our corporate accounts at Trade Ideas, Jamie Hodge is QuantBot. Like us on Facebook to get our updates there. We post some original content there sometimes, facebook.com/TradeIdeasPro. And our phone number is great during business hours to help with any kind of billing or subscription issues if you're having problems logging in, that kind of thing. However, I want to remind everyone that technical questions should go to the info@trade-ideas.com. That's the best place for that. It gets routed to the appropriate team member that knows your answers. Thanks, Steve. Thanks, Andy.
Thanks, Scott.
Yeah, we will talk soon.
All right.
All
See
right.
you next week.
Thank you, guys.